Hi, everybody. Welcome back. My name is Craig Kern. I'm the founder and lead educator here at True Alpha Trading. In this session, we're going to talk about trading or investing in stocks. Now, before we get started, just some terms here that are often used synonymously are stocks or securities or equities. And just know that typically if anyone is using the terms securities or equities, they're talking about stocks. Okay. Now, stocks are one of the primary or basic fundamental building blocks of the stock market. Most of the other products that you'll find in the market are derivatives of stocks, meaning that they are products that are derived from individual stocks. Some of these other derivative products are things like mutual funds, exchange traded funds, equity indexes, option contracts, and even some futures products. And the main thing that drives change in these derivative products is a change in the value of the underlying stock prices that exist usually inside or beneath those derivative products. And we'll get into talking about derivatives in other sessions, but for now, let's talk a little bit more about what stocks are and how to trade them. That's going to be the focus of this session. So first, what are shares of stock? Well, one share of stock represents one unit of ownership in a corporation. First, it's important to highlight here that no other type of business, sole proprietorships, partnerships, LLCs, etc., no other type of business issues shares of stock to quantify the value of a person or entity's ownership in a company. Only corporations do that. Shares of stock are unique to corporations. And the shares of stock that are publicly available for you and me and anyone else out there to buy or sell are shares of stock in publicly traded corporations, meaning they've authorized shares of their stock to be made available to the public to buy and sell rather than exclusively bought or sold by private investors. So what are some of the main reasons a corporation might want to go public or become a publicly traded corporation? Okay, well, number one, it might be to raise capital. So the ease of raising capital might be an easier route by going public for a corporation versus seeking the capital that the company needs through a private offering. So that's number one. Number two is going to be to enhance the visibility or awareness of the corporation. So we'll just put awareness as number two. And often just by going public, it puts the corporation out there more publicly. It puts them on the map, right? So just to create more awareness publicly for that corporation. Three here is liquidity. So when it comes to liquidity, by going public, a corporation might have a more readily available market where shares can be bought or sold. So liquidity might be another reason. And then four is employee benefits. Okay, so by going public, sometimes corporations can add employee benefits like stock-based compensation plans or stock option plans or benefits like that. So those are typically the four most common reasons that corporations go public. And there might be more, but these four are typically the main reasons that a corporation will go public. So again, what is stock? One share of stock represents one unit of equity or ownership in a corporation. So the next thing that I want to do here is just pull up a couple documents to show you examples of where this idea of stock comes from, and hopefully just to drive this home a little bit. So as you may know or not, some of the original documents that a corporation has to file when it's created are a certificate of formation or articles of incorporation. And I'm going to pull these up for you here just to show you that the idea of stock actually foots to the organizational documents of a corporation. So the first one that I'm going to pull up here for you is the certificate of formation. So this is, again, one of the organizational documents that a corporation will have to file with the state that it intends to operate in. And the main thing that I just want to show you here is right down here in this section at the bottom, you'll see where it has the person that's creating this corporation actually identify how many authorized shares of stock the corporation is creating initially. And you'll see here that there's a par value given to each share as well. It may have no par value, or you can assign some par value. All that means is just the minimum price that the stock can be sold for. And so the main thing here just that I wanted to show you is that the shares of stock that are created by a corporation actually ties to the company's organizational documents. Another document here for you is the Articles of Incorporation. I just want to highlight here for you again, you see here that what's defined in here is the amount of shares that are actually authorized or issued by the corporation. So one thing to note here is that the shares of stock that a corporation authorizes doesn't always mean issued. A corporation often creates more authorized shares and then issues shares over time for various reasons. So the amount issued doesn't always match the amount authorized. Just know that these numbers, how much is authorized versus how much is issued, generally ties back to the organizational documents of a corporation. And I hope this is just helpful for you to see, so you can see that the shares of stock for a corporation and the idea of stock isn't just arbitrary. It's not just kind of floating around out there randomly for corporations. It's actually specifically defined in each corporation's organizational documents. And so hopefully that's helpful to you. The next thing that I want to do here is just show you how this ties to a corporation's profit and loss and balance sheet. And so I'm going to pull this up for you. So along with the organizational documents that are created